Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is February 20th. We're going to take a look at Omnicom Group. This is out of the communications sector, and this is a suggestion from a subscriber to the channel. Tanya Myers commented, looking into OMC to see if I buy or not. Well, I'm not going to tell you if you can buy or not, but we will run it through the screener and see how it stacks up. This was on a video I did here, portfolio update video on Sunday 4 days ago. So if you want to check that out, go ahead and look at that video there. But we will take a look at it and run it through the screener, Tanya, and see how it shakes out here. Now, before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, make sure you subscribe to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the vested interest community. Click the notification bell so you're notified whenever I put out any new content. I do this stock pick of the day video series Monday through Thursday when the market's open. We take a look at a company like Omnicom Group and see if it's pulled back on the day and run it through the screener and see how it shakes out and if it makes it onto my watch list or not. Just because it does make it onto my watch list or doesn't does not mean that I am investing. It just means I'm interested in doing more of a deep dive into the financials of the company if it does make it onto the list. And there is the thanks button down below for anyone who might want to buy me a cup of tea. Really do appreciate you all for being viewers and subscribers to the channel. You guys are awesome. The channel continues to grow because of people like you, and doing all that doesn't cost you but a couple of seconds of time, but it really does help out the channel. Now, this is the vested interest stock screener. You can pause it here and go through this criteria, but this is how we will be running through the video, covering this criteria here. And if it was a financial company like a bank or an insurance company, we would add in price to book. But since this is out of the communications sector, we won't be looking at that. So it must meet 5 of 8 to make it onto my watch list. Now, back to Omnicom Group. You can check them out at their homepage at www.omnicomgroup.com. That's www.omnicomgroup.com. Again, that is their homepage where I pull this information from. Omnicom is an interconnected global network of leading marketing and communications companies. Our portfolio provides the best talent, creativity, technology, and innovation to some of the world's most iconic and successful brands. We offer a diverse, comprehensive range of marketing solutions, and that's really their bread and butter, marketing, right? So if you're seeing commercials out there or marketing campaigns, maybe billboards, magazines. I don't know that a lot of people even look at magazines. Maybe you look at them online now, online ads, that sort of thing. That is what Omnicom is out there doing. They are providing the marketing solutions, spanning brand advertising and advertising that their customers need. So 5,000 plus companies are using Omnicom for their marketing and public relations services, media planning, numerous specialty communication services to drive bottom line results, right? This is how they're advertising and marketing their products to you as the consumer. That's what Omnicom's role is in the process. Now, the reason we're going to take a look at them, down 0.1%, so not a big drop, but since it was a suggested video or suggested company, I thought we'd take a look at them anyway. I've been watching them for a downturn day. So we got one down 0.1%, not a big drop. We are talking about Omnicom Group, ticker OMC, again out of the communications sector. Closed out the day at $83.60. 52-week range as low as $80.31, as high as $107. They are within 15% of a 52-week low currently. They do have a market cap of $16.427 billion, a beta of 0.99. So, I mean, just a tick less than the overall volatility of the market. That's what beta means. It is this, you see this chart, ups and downs of the market. That's what beta means. It's the volatility of the market. PE ratio, price to earnings ratio there is at $11.21 per share. Earnings per share, EPS is sitting at $7.46 per share. Earnings date coming up sometime between April 14th and April 18th. In that window there, they will report out their earnings. I don't cover earnings reports here, but you can probably find it on their homepage or listen into their call there. They typically have a phone call for a lot of these companies whenever they do their earnings report. Forward dividend is at $2.80. They're a quarterly payer, so divide by 4, though we'll see that here, what they pay per quarter per share at the end of the video. Starting dividend yield is nice at 3.35%. Ex-dividend date, March 11th. So you want to buy them on March 10th or before to get the next dividend. It looks like they're going to pay out in April on the 9th. 1-year target estimate, at least according to Yahoo Finance, $111.84. I am not affiliated with Yahoo Finance, just one source I go to for information. Now, Let's jump over and look at dividend yield theory, see if this one is potentially presenting any undervaluation, at least according to dividend yield theory. To do that, we look at their 5-year dividend yield average of 3.66%. We compare it to the current 3.35%, or over here where it says forward 3.35%, same number. And since their current dividend yield is lower than their 5-year average, that actually speaks to overvaluation, at least according to dividend yield theory. Now, their payout ratio does say it's low at 37.53%. I like under 75%, so that would beat the metric that I'm looking for there. This does give them plenty of room to increase that dividend over time. It doesn't look like they're in danger of a dividend cut there. And we want growing free cash flow, so I throw in free cash flow here. And the reason I want growing free cash flow is because companies do some things with free cash flow. They pay down debt, they make acquisitions, reinvest back into the company. They pay out dividends, they can buy back shares, and if they're paying out dividends, they can raise those dividends over time. So I want growing free cash flow, and I also want a low payout ratio, right? That's why I look for something under 75%. To me, that speaks to some safety there. It still gives them 25% of their free cash flow to invest back into the company. In this case, even more than that. But going back to free cash flow here, December 2021, they had $1.27 billion in free cash flow. December 2022 looks like a big drop to $848 million. December 2023, it was back up to 1.3 billion, and 24, it was back up to 1.59. So it looks like at least over the last 3 years we've had growth, but there was that downturn from 2021 to 2022. They are repurchasing shares as well. 527 million taken out of the market in 2021, 2022 611 million, 2023 570 million. And you'd have to do the math, but it's going to be pretty close here. I think their free cash flow is still growing, but they did decrease the repurchase of shares from 570 million in 2023 to 370 million in 2024. So might be pretty close to flat free cash flow actually in 2023 to 2024. But overall, they're taking shares out of the market. You want to compare that also to issuance of shares. Sometimes companies issue shares, especially to executives, senior executives. So you want to see if they're pulling out more shares than they are issuing to make sure that it's a negative net there. Now, jumping over to stockanalysis.com, this is another source I go to for information. Again, I recommend more than one source so you can make sure the information you're getting is accurate and up to date. I am not affiliated with stockanalysis.com or Yahoo Finance, just 2 sources I go to, and you pick any sources that you like. Just don't blindly trust, just one source. Now, they do have they do have 8 analysts that have taken a look at this. They call it a consensus buy. It's right there on the edge of a hold and buy. If you were to go to stockanalysis.com, you could click on these tabs here. This would be a strong sell, sell, hold, buy, strong buy. Looks like more of the 8 call it a buy or a strong buy than call it a hold or a sell there. Like I said, though, it is right there on the edge. So low estimate of $89 would represent a 6.54% increase from where it currently sits. It currently sits lower than their lowest estimate. $108.25, which is pretty close to what we saw with Yahoo Finance on the previous page. That would represent a 29.58% increase. And if it happened to hit their high of $124, that would represent a 48.43% increase. All the while, you could collect that 3+% dividend yield that they're currently paying out. Jumping into statistics, I like to look at return on invested capital and return on equity for an initial screener. A lot of other good information under the statistics tab. But for our purposes, we're going to look at ROE, return on equity, and ROIC, return on invested capital, to see how well the company is investing its funds back into itself. I like 10% or better here for both of these metrics. Return on equity at 32.07%, beats the 10% I'm looking for there, and return on invested capital at 12.10%, beats the 10% I'm looking for there also. Must beat both to get the check. I have thought about in the past breaking these 2 up, but I'm going to leave them tied together right now. EPS growth, I like 5% or better projected over the next 5 years. They're sitting at 7.41%, so beats the metric I'm looking for there, with decent dividend growth forecasted at 3.26% over the next 5 years as well. Now let's look at the dividend history here as we wrap this one up. Quarterly payer, as we spoke about, dividend yield, payout ratio is low, 37.53%, so under the 75% I'm looking for. Dividend growth, though, no dividend growth. We'll see that here in a second. Buyback yield is positive, so they are buying back shares at opportune times whenever the shares are relatively cheap, and shareholder yield positive at 4.72%. This company does pay off schedule from most companies, January, April, July, October timeframe, like that. And as you can see here, going all the way back to 2022, and I think it actually was a little bit further whenever I looked at this one, They have not raised the dividend in some time, even though they have a low payout ratio, which is odd. I mean, I would even like just small raises with such a low payout ratio. But September 2022, they were at 70 cents, and they maintain that to this date. So unless they start raising that dividend in 2025 here, there is no dividend growth on this one. All right, let's wrap this one up by checking out the screener here. Vested interest stock screener here. Understand the business. Check there. That's where we start. Right? Again, they're a communications company. They're involved in marketing, advertising, PR. That sort of thing is what they are doing for other companies. So again, you might see their billboards, not even realize that they're their billboards. You might see their commercials, magazines, that sort of thing, internet, that sort of thing. Wherever you're looking at products, they may be the ones doing that marketing and that marketing campaign and advertising campaign for companies. Growing free cash flow, no, it's been a bit up and down. Actually, the last 3 years, it's probably been growing pretty decent, but 4 years ago, they did have a downturn from 2021 to 2022. Growing dividend, no, at least back to 2022, and I believe even further back than that, they have not grown the dividend in some time. Payout ratio is under 75%, which makes it a head scratcher why they're not growing the dividend. I mean, it's under 40%. So you'd think they could even do little increment 3-4% raises and not really impact the business that much. But maybe they're paying down debt or doing something else with those funds. Check valuation based on dividend yield theory. It is not potentially overvalued. Actually, according to dividend yield theory, it is potentially overvalued. Buy below 50 or within 15% of a current cost basis. Yes, it is within 15% of a 52-week low. Currently, return on invested capital and return on equity both over 10%. So check there. Earnings per share growth was over 5%. We're looking at 1, 2, 3, 4, 5. This one just slides onto my watch list. A couple things I'd really like it to do is, like I said, increase that dividend. Unless they're paying down debt significantly, I'd like to see dividend increases over time here. And I'd like them to get another year under their belt of growing free cash flow. Like I said, it looks like about the last 3 years they've been doing well, but 2021 to 2022 was a downturn. So, but overall, they make it on my watch list. Let me know what you think in the comment section down below. Tanya, hopefully I don't know if that answers your question, whether or not you should buy them, but it definitely would be worth more of a look into the financials of the company, in my opinion. I may do that this weekend. Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of Omnicom in the comment section. Is it a company you're watching? Is it a company you're selling? Is it one that you're waiting for more of a downturn? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Omnicom you'd like me to cover in the Stock Pick of the Day series, drop it in the comments. I'll try to work it into the rotation on the day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in, and hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you are not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.